So now we're going to be talking about directional bias, right? We're going to be talking about directional bias after you've seen what it is you're looking for in the markets. After it is you've seen the basics of everything. How do you know when to buy or when to sell? What do you look for? How do you build your storyline? That is what we're going to be addressing in this particular video. And if you've not liked or subscribed, I urge you to please like and subscribe for more videos like this.
Alright, so you're welcome to today's video. Alright, today we're going to be talking about building a story. Building a story. And this particular class here is going to be divided basically into two parts. It's going to be divided into directional bias and entries and confirmation. Alright, so today's class specifically here is going to be directed towards directional bias, right? How to use key levels, what to look for when you're dealing with key levels, directional bias. So, what's a story, first of all? A story basically shows you the right, it gives you a broader picture of what you're supposed to look for in the market, right? When you go into the market and you start to react of anything you see, any key level you see, any P shape, A shape key level, any SBR, RBS, any QML you get to see in the market here, it's not going to be good because if your higher time frame does not really match the lower time frame, you might end up making mistakes. Not you might end up, you will end up making mistakes. You understand? So it's best for you to have a story behind. And a story is usually formed from a higher time frame to a lower time frame. So whatever it is you see on the higher time frame or lower time frame, it's meant to be broken down for you. All right. So when it's broken down like for you, you would be able to know where exactly to do things, like where to buy from, where to buy to, and where not to buy from. Same thing applies to sales, where to sell to, where to sell from, and where not to sell from. Right. So today basically we're going to be talking specifically about directional bias. Right. What is directional bias? Directional bias is gives you of view of what the market is doing currently. Right. So if the market is in an uptrend, you get to follow the uptrend. All right. Same thing applies if it's also in a downtrend, right? On the higher time frame, if it's in a downtrend, you get to follow the same thing on the lower time frame. On the higher time frame, if you get to be in an uptrend, you get to do the same thing. All right. So when I deal with my directional bias, what time frames do I deal with? Right. So um when I do my directional bias, I like to keep myself within the ranges specifically of daily 4 hours, 1 hour, 30 minutes. Those are the main time frames I use. But right, to have a broader view of everything, you need to have maybe the monthly by the side. You need to use the monthly. I use at every new month, week, you get to check the market. You get to check the bias from the higher time frame, so you don't get to miss anything. All right. So from the monthly time frame, you check what the month the what's the from the monthly time frame, you check how the market looks on the monthly. From the weekly time frame, you check how the market looks on the weekly, on the daily. It can be able to do so. The more you keep checking from the higher time frame and you keep breaking it down, yeah, it gives you a particular focus. It keeps reducing your focus. So instead of looking at every other candle on the board, it now reduces your focus to just those few candles you keep looking at. Because like from the daily, so from the monthly, you know that you're supposed to focus on this particular side of the chart. On the weekly, it makes you focus on that particular side. It goes lower. From the daily, it goes lower. So at the end of the day, you know that you are now stuck within the 4 hours and 1 hour. And right then and there, with that little information you've had from the week for the monthly and the weekly, the 1 hour and the 4 hour makes so much sense that you don't need every other candle that shows at the back. Now, while this could be plenty, it can be, different for a lot of people. For me, when I deal with structured liquidity key level, I could just have maximum, maximum this, this side of the candle, just here alone at the end of the day when I'm dealing with mine. All right, I might just end up dealing with just this particular side of the candle, just this little uptrend that is happening here. Sometimes it might even just be just somewhere here. It might just be that one candle, but it just reduces everything and it gives you a clearer picture of what you are meant to deal with when you're on your time frame. Right? So for me, that's what I did. A lot of people have their own directional bias starting from the daily, the 4 hours, 1 hour, 30 minutes, 15, 5. Right? That as you can see, I deal with them sometimes when I want to like scalp. Right? This particular strategy works on any time frame. You just need to have a higher time frame backup to show you. Right? So now that we know the time frames we're going to use, or specifically going to use, how do we use them? How do we use these key levels? Alright, how do we use these key levels to match? Mind you, today we are just specifically talking about directional bias. Alright, directional bias, where the market is going and where it's not going or where it's coming from. Right. So for us to deal with this, do not forget we have the knowledge of market structure that we've had in a while. All right, so the knowledge of market structure is really, really going to help us here because we already know market structure shows us that if market is buying, it is buying. If it is selling, it is selling. All right, the higher highs, the higher lows, and then eventually we have to deal with the algo market structure, the A, B, and C's. Then we had liquidity by the side to show us where not to buy from because what it's a few in the market. All right, then key levels, the A shapes, the V shapes, and the open close key level. Right, then types we have like the types of the key levels. Right now, the types of key levels basically would help you with the bias and also help you with the entry. I don't know if that makes sense. All right. It will help you with the bias, identifying what it is showing you in the market, and at the same time, it's going to show you where exactly to buy or sell from. It might sound confusing, but once we get in the chart, it's going to be easy. So, with that being said, let's get into something. Let's get into something. All right, let me show you exactly this one. I'm going to give you this example on directional bias. All right. So we have look at this from the weekly time frame. This is GPUSD, right? And as you can see on the GPUSD, we've been on this long as buy. We've been on this long as buy for a very long time. All right, and you best believe if you want to identify, you know, the if you want to identify, the trend, you get to see that market have taken out what, just like I told you, when market takes out liquidity, you know, taps into the next key level, which is here. This one probably missed, so it taps into this particular open close key levels that are here, right? See this bullish open close, these bearish open close key levels that are here. Tapped into this bearish open close key level, and also I don't really trade fair value gaps, but here it filled up this gap that is here and we've been on a buy streak. So that alone has given me what I want to look for from the weekly. That has given me if the ball knowledge or the market structure knowledge I needed. All right. So there's a fair value gap in between here. Like I said, I don't trade fair value gap, so I will remove that out of this place. But like just like I told you, if you use the market structure knowledge, you will know that this is what a higher high, right? This is a higher high. There's a what? Hello, hi, look at this, look at this. All right, now you get to see that market was now on the downtrend for a while. Now, if you have the elite ball of like the liquidity, right? Now, if you have the elite ball knowledge of liquidity that I said, you get to notice that I said something even with market structure too. By the way, look at this. You can see that market broke this high that is here, right? And did what? That was a B, that was the B which is right here, the V shape which is right here. Market broke it, like market broke this high, gave you a new higher high, that was the B. Market took out the B, tapped into this particular what key level. This is where the key level actually comes in. Remember when I said something about SBR and RBS, right? SBR. So when market does what? When market breaks the resistance, it turns into a support. So it broke the resistance, this particular resistance right here, and turned into a what? Into a support. So which means it's now an avenue for us to buy. And there was liquidity right here. What is liquidity? The fuel, right? So market or price took out the fuel, tapped into the what there. RBS, resistance break turns into support, tapped into the RBS, and we've been buying. Right now, market structure, do not forget, once market breaks that high, another RBS again, key level, right? Breaks the high, there's liquidity here, there's liquidity here. Price took out what? The liquidity, tapped into the what? The what? The support zone. It tapped into the support zone. Whether it tapped or not, that is entry, that is a different thing entirely. But this is what? Directional bias. So tapped into this, tapped into this level right here, or should I call it this particular level, whatever, right? Tapped into this level, took out these liquidity zones. So if you watch, for you to get a clearer picture of this, you need to watch my liquidity video. You need to watch my liquidity video. So, like I told you, right? Let me use the algo market structure like I explained. Swing high and swing low. Okay, it was that, is that low. That one has been taken out. Let's use this. This is our new swing. All right, that is what the swing structure. We have what? The substructure, which are these little the retracements that happen here. This is that retracement. The substructure, in other words, the liquidity, in other words, the B, in other words, the inducement, these particular zones, right? And just like key level has been taught, we have the RBS and the SBR. So market or price broke the, the R and turned into an S, resistance turned into a support, and tapped into this level right here, the support zone for buys. Now, I told you, while it is still buying and it has not taken out the new swing, what we are looking forward to seeing is minor structures. So minor structures indicating that we are looking for whatever happened here but on a lower time frame. So if you go to lower time frame, minor structure is going to be the exact same thing right here. Something like this: liquidity takes it out, does the exact same thing again, right? Takes it out, does the exact same thing again. That is basically what it's going to look like on lower time frame. All right, so we scroll down to the daily time frame. On the weekly, we've done our bias on the weekly, right? On the weekly, look at what happened. Look at what happened. You get to see that what we had a change of character. All right, we had the change of character. Which price did what? Minor structure. This is what substructure right here. We're still in the minor structure. We've not taken out the higher swing structure, right? So this is the B. Price took out the B and bought. All right. The little retracement. Don't forget, I told you the inducement can be a single candle, right? And we had what? A tap. Same thing happened here, right? RBS, SBR. RBS has just been happening here so far, right? RBS basically it is just break, retest, but with liquidity. Do not make that mistake, with liquidity. All right, with liquidity. Now, in this case here, we're still in that's one thing about minor structures. Minor structures most of the time, especially when it's in a trending market, right, might not always come back for the exact support zone, but be mindful of it, right? There are times where it's going to be a miss, or it's going to be a missed entry. There are times where it's not going to be a missed entry. But in this case, this was missed, right? Same thing applies here, and boom. This was the setup I caught last week. I caught this last week. Look at this. Let me explain to you what happened here. So do not forget what we have on the weekly time frame. We still have the bias that market is just going to keep buying, price is going to keep buying until what level? Until this level. Alright, so if we have that in mind, that price is going to be buying to that level, it means we're going to be trading the RBS that keep popping, which is resistance, you know, turned into support. Right now, with this being liquidity, something like this, and boom. Right, so this is our A, this is our C, and this is our B. Now we can see that happening here. Look at this. This is the daily time frame, by the way. So basically, yeah, do not forget what I told you. Alright, we're still in the minor structure, do not forget that part. So we had this breakout here. So now boom, we have our C. Alright, I told you guys the C is the ERL, the external range liquidity. Now, where is the internal range liquidity? Look at this here. A single candle, right? Liquidity. Now, let me show you in case you doubt whether it's actually a V shape. Let's look at it. You can see multiple V shapes. Look at this. This is a V shape. This is also a V shape. If you need the line chart, we can use the line chart. This is the V shape. This is also a V shape. All right. Now let's go back to the daily time frame. All right. Now look at this. All right. As you can see, based off structure, we had the retracement. This is the V, right? The V shape, and then we did what? We bought into it, and boom, we've been on the buy side. All right. We've been on the buy side. Yes, do you see this? We've been on the buy side ever since. Now we can have the same thing right here. Breakout. Alright, we expect to see what our V, which is what a B, which is what the inducement, something like this. And this particular pattern is going to continue until this gets taken out. Alright, until this gets taken out. Alright, that is how it's meant to look like. That is how structure presents it. That is directional bias. That is its structure. Now, we can't just enter the market hoping to just start picking off any break and retest we see, especially if we are still on the daily time frame. Alright, especially if we are still on daily time frame. Now, this is where how to use key level comes in. Right, I'm going to explain to you how to use key levels. What do you do when there is the SBR? What do you do when there is the RBS? What do you do when you have an A shape or V shape? What do you do when you have a QML? What do you do when you have these that actually follow structure? Because in this case now here, if you notice it from the weekly time frame, we already have our structure, which is what to keep buying. Right? We already have our structure, which is continue buying, just keep looking for them buys, right? So the next thing you want to look for is the structure on the daily time frame. You're looking for how to enter the market or identifying a bias on the daily time frame, because you cannot start setting your entry on the daily time frame. Right? You set your entry on the based off my strategy, structural liquidity key level. I don't take my entry from the daily time frame. I take mine from the 4 hours. Alright, so when I wake up early in the morning and I have my weekly time frame structure, I have my weekly time frame bias placed there. On the daily, I wait for market to tap into my zone. Now, once market tap into your zone, what do you do? Because on the daily, you've been presented with the structure, which is what the RBS. The RBS has presented itself here, and obviously you want to buy, but you cannot start buying off the daily. You can't just start buying off the daily, right? So what do you do when you have such key levels? Level, whether it be the RBS, the QML, right, or your regular A shape or V shapes, right? What do you really do? All right. So this is how to identify. This is how to identify or use the key levels. Now, in a situation where you have, you know, a V shape. No, let me use the A shape rather. A shape is way more easier to explain. The V shape is rather much more easier to explain. So, in a situation where you have a V shape key level, all right, you have a V shape key level. What you want to see in the market, right? This is where my strategy comes in. What do I do when I wake up in the morning and identify or I get to the market? And what do I really do? So I get to wait for the V shape and I wait for market to do it, to tap into that particular key level. Right? The key level has been tapped. I wait for a tap and a reject. I wait for market to tap and reject. Alright, so let's say this is the daily time frame we're dealing with right now. This is the daily time frame we're dealing with. I wait for the tap, I wait for market to tap and reject. Alright, I wait for market to come to that key level and reject off it. Now, once it reject off it, I get to do other stuff on lower time frame. But based on the daily time frame, right? I wait for tap and they reject. So I wait for market to tap this particular key level and reject off it. So once market taps this key level and reject off, is a sign for me that this particular key level has been respected. Right, this key level has been respected, and it's when it's getting when it's like respected, right, then I expect to see, then I get to see what, to see buys. I get to see buys. I get to see buys. Right, same thing applied to the A-shaped key level. Right, in institution, should I use invert scale for this? Well, in institution where you have, the A-shaped key level, right, you draw your line across the A-shaped key level. Okay, you draw a line across the A-shaped key level, right? What you want to see is what, a tap and a reject. You want to see markets do what, reject off that zone and close, right? You're waiting for that particular candle to close, because like if you don't wait for it to close, there are situations where, based off candlestick anatomy, yeah, there are manipulations. You could have market do this, and all of a sudden before the end of the day do this. Alright, so what you want to do, whether it be 4 hours that you're starting your directional bias from, whether it be weekly you're starting your bias from, whether it be monthly, right? Like me, I start mine from the daily, right? You wait for markets to reject fully. Alright, you wait for markets to reject fully. Let it reject fully. Alright, market should reject fully. So now let me put it in based on the types of based on the types of, this is what we have. These are the types of key level, do not forget. All right, so we have this, we have this, and now this is RBS. All right, this is RBS. So what do you want to do? You're waiting for market to what, reject off this, provided, do not forget, there is what, there's liquidity. All right, so we have liquidity and we are waiting for what, price to tap and reject off it. So this is what it's going to look like. This is going to, what it's going to look like on the high, on that particular time frame you're dealing with. Whatever time frame you're using to start your bias, it's really you as a trader. So this, then on the lower time frame, right, then this is what you're going to be looking for. Right, this is how it's going to be. So you have to wait, right, for the day, for you have to wait for the candle to fully reject. A lot of people trade that particular day, but I don't trust it. So here's what I do: I wait for that day to fully reject. Right, so in this case, look at this particular one. This was GPUSD, right? This is GPUSD, right? So look at this. So we had this particular key level. Entries will be addressed later. We had this particular key level, this particular open close key level, right? Open close key level right here. And what happened? Right, before we do that, let me let you know something. There was structure backing. Right, market was already in the back in the uptrend, which I explained in the weekly time frame, and we had the B. Right, you always, when you have the B here, you always want to take the key level for, and when you want to address or you want to take your setup, always start to buy or sell after the liquidity. So the idea is to wait for liquidity to get swept. All right, so wherever liquidity lands, right, liquidity could land above here, liquidity could land in the middle, could also land at the, towards the ending. Wherever liquidity lands, the next key level is what is where you expect to start to buy or sell from. So as you can see, this is liquidity right here. Always buy from the key level or sell from the key level after the liquidity. This is the liquidity. This is the next key level. This key level is also an open close key level. It's also an open close key level if you look at it very well. Alright, this is an open close key level, which is the next key level after the structural liquidity, the IRL. Alright, so once we wait for the tap, that's rejected. Alright, wait for the tap into that key level, rejected. And mind you, this, we waited for this to happen fully, then we started to look for setups from here. So this is the day the thing rejected fully, we started to look for the setup from this particular day. Right, so now that we have, the tab, we already know what we are looking for on the daily time frame. All right, we know what we are looking for on the higher time frame whenever we are looking for our setup. So after structure, what we look for is where the key level lies. So in this place, we had the structure from the weekly time frame to buy. Right, on the daily time frame now, we have the RBS. right? Which is the structure for us to continue the buy, to continue the buy, right? Now on the daily time frame too, we now want to start buying. Where do we buy from? Where do we start to buy from? We had what the key level, which is right here, showing us it's an open close key level, an open close key level after liquidity that we wait for the market to price to tap and reject off. So once you wait for price to tap and reject off this zone, what do you want to wait for next? You go to a time frame lower and identify a breakout. Now, what is a breakout? A breakout here shows you a trend continuation. All you wait for is just a breakout. Some people call it breakout, some people call it breakout structure, right? Some people even have change of character. You can also wait for a change of character. It doesn't matter. I personally I prefer even you using a change of character because a change of character shows you that market is completely changing trend and it's following your side, your setup. So basically, yeah, based off this, you can see that we got a reject, tap, and it got rejected. Market tapped into this key level, this open close key level. After we had was liquidity right here. Now, for those that even trade fair value gap, you know that this is what the gap that we probably that got what filled up. So an imbalance, market came to rebalance and hold imbalance. So on the 4 hour time frame, right, this is what we get to see. Do not forget this is where the tap and reject happen. I told you, you wait for what? What are you waiting for? You're waiting for a breakout. So what the next thing we saw? This was the breakout. There was a breakout here. Alright, you have to use the line chart because like the line chart gives it to you clearer. And also see breakout here. Alright, now there are two breakouts. There's a breakout here, right? And there's a breakout here. If you've been paying attention so far, you've noticed I said one thing very, very key. I said wait for where there is liquidity. Buy from where the liquidity is what? Buy from where the liquidity, like after the liquidity, that's what I'm trying to say. Buy from, like, buy after liquidity. Right? So this is where the tap and reject happen, right? Tap and reject that happened from here. Next thing we want to see is what? A breakout on the lower time frame. So like on the 4 hour time frame, we got a breakout indicating that trend is going to be continued truly. You understand? Trend is going to be continued truly. So there was a breakout. Then the next candle, right, that we get to see was what the inducement, or in other words, the liquidity. Right? Check the 1 hour time frame. We get to see that that is a liquidity. It's a V-shaped key level. Look at this. This is a V-shaped key level. All part of it. Check the 30 minutes time frame. You get to see the same thing. If maybe that is not really satisfying enough. But mind you, 30 minutes should be the least place you get to look for key levels from. Alright. Now you get to see that the breakout was even clearer here on the 30 minutes. But we're still dealing with the 4 hours. So this is it. This is the 4 hours. Right? So we have this inducement, we also have this particular V shape, and this V shape, this B as the inducement. Right? Look at this. If that's not really suiting enough for you, this is also a V shape. This is also a V shape. Look at this, it's clearer there. All right, so now let's just say this is actually our V shape. So now we have our what? A B. We have our pullback, we have our B, we have our liquidity, we have our inducements, we have our structural liquidity, whatever you may call it. All right, we just have the thing that is meant to be taken out. So we have our few. All right, now what did I tell you? You take from the key level after, take from the key level after, take from the key level after the liquidity. That will be the end of today's class. That will basically be the end of today's class. All right, do not forget the necessities of what I told you, right? From the weekly time frame, right, to the daily, to the 4 hours, and to the 1 hour, right? It is that simple. It is that simple. From the weekly to the daily, you have to build your storyline, you have to build your bias, you have to build it up so you don't end up going to take random buys and sells from any time frame or any place you get to see in the market. All right, do not forget what I told you. Do not forget it. If you have a problem, just go back to the videos. The videos address market structure, algo market structures, and your highs and lows. The algo market structure, your algo market structure shows you the A, B, and C. The A being where you have to buy from, the B where you're not supposed to buy from, because that is the fuel or the food. It's like you going to go and eat, take it like that. Then the C where you're actually going to buy to. Liquidity being placed in that scenario of what I just gave you in the Akku market structure. The ERL is your target, and the IRL is where you're not supposed to buy from, which is your liquidity. Alright, your liquidity, people call it inducement, people call it structural liquidity, people call it whatever it may be. Just know that that zone is not what you're supposed to buy from. What you are supposed to look out for there is for price to take it out. Once price take it out, is a clear confirmation that your direction is actually like, it's a confirmation to actually be natural at that point in time, as long as the liquidity is swept.